Hey everybody, Boris, BK Forex. Welcome to our weekly technicals for the majors for Euro dollar, dollar yen, and pound dollar, July 30th to August 3rd, 2018. And it's really going to be shaping up as a show me week because it's going to be a very heavy data-driven week in the majors, especially in cable and the dollar. And so we're going to get a lot of information from both the Fed, the BOE, and end the week with non-farm payrolls. And the story really right now essentially still remains weak dollar trade. After Trump last week, or the week prior actually, really flipped the script on the dollar by saying that it's too strong. He wants to see the Fed not strengthen interest rates more. It's been essentially under assault going forward. Furthermore, I think that suspicion that the best of the U.S. growth is behind us now, as we saw in today's U.S. GDP data, which printed well, but not extraordinary, and appeared to essentially communicate that forward data is slowing down. The market is really not reacting as though the dollar deserves the rally that people anticipated it should get because of the interest rate differential. So in order to really flip investment sentiment, in order to completely change market opinion about the possibility of a stronger dollar, we need to see some very strong data this week. Otherwise, we're trapped in these ranges and perhaps actually even probe the lower end of the ranges for the dollar, higher end of the ranges for the anti-dollar trades. As far as the ranges go, they essentially remain the same in a very wide sense. The euro continues to hold that 115 level quite comfortably for the time being, despite the fact that Draghi tried to batter it down again in the ECB meeting. And the data out of the Eurozone is not by any means great, but not terrible either. It still remains in an expansionary mode, and that's, I think, the key takeaway here. But we're basically trapped in this 18-115 zone, and we're probing now the lower end of the zone and bouncing off of it. Dollar yen, though, which is interesting because we broke the 111s this week. And now, I think the true battle is going to be between the sort of 110, 112 range. If things turn sour for the dollar, it's going to be the 110 that gets tested, and we're going to be watching that very, very carefully. And of course, cable is just very much its own story this week because of Bank of England rate decision, where the market is anticipating almost a done deal just because the Bank of England will lose face tremendously if it does not raise rates after sort of communicating so strongly that it tends to do so. But the more interesting question is, will they simply communicate as a one and done deal? I think there's just the irony of the whole thing is that the story on Brexit has gotten even more muddied and more uncertain than before, as it appears that there is no consensus on the UK side. The Europeans are basically waiting for some sort of a reasonable proposal. There's still just absolutely insurmountable differences regarding the Irish border issue. And all of those things just continue to creep along and weigh on UK. We're going to, interestingly enough, before we get the Bank of England decision, we're going to get a couple of PMIs, and that's going to be very much worth a look, because if the PMIs start to show kind of a degradation of confidence amongst the business sector, it's only, I think, going to add to UK woes. I am still fundamentally negative cable as we walk into this week. So let's take a look at the calendar first, and then we'll take a look at the charts. So the calendar this week, we start out on the majors, basically confidence, CPI data out of Germany, nothing really super strong. Kathy is mildly bullish the euro at this point on the CPI data. We move into Tuesday, where we get core CPI data out of the Eurozone. She'll update that off the German data. And then we personal income, personal spending out of US is going to be actually quite interesting, because that also will impact, I think, dollar sentiment, because the critical link that's missing in the strong dollar story is the consumer. And until the consumer gets more money, I think it's going to be very difficult to imagine a strong dollar. So far, K is actually bearish dollar yen all the way throughout the week on whatever data that we have. To the front of the week, the middle of the week is when really a lot of stuff comes up on the majors. We get the ADP numbers, and remember, this month, ISM services, which is the key precursor of the employment data, comes after non-farm payrolls. So the best reading of possibility of what non-farm payrolls will be like will come from ADP. Market is looking basically for 200,000. I don't think there's much of a variance here, one way or the other. The more interesting question is going to be where the wages are. I'm going to look at that in just 1 second. We have the FOMC rate decision, which again basically looks at no changes expected because this is a non-quarterly, non-press conference month. So very much likely, I think it's going to reaffirm exactly what Chairman Powell said to the Congress last week. Really don't expect any kind of market moving event out of here. ISM manufacturing will be of interest. Also, sort of a mild, everybody's looking for kind of mild revisions to the downside. The more interesting stuff, I think, is going to be the UK side with UK PMI manufacturing coming in here. And then we don't get, I'm trying to see, do we not get, yeah, the services comes in afterwards, unfortunately. The PMI services, which is really the important one in the UK, comes after the Bank of England rate decision. So really the Bank of England rate decision on Thursday is going to be very critical. We'll be watching that, especially the communique from Governor Carney as to whether they will essentially do a one and done. At which point the cable is probably going to sell off rather than rise if he provides a very dovish background to his commentary. And in the end of the week, of course, we come up with the non-farm payrolls, which is really the big end marquee event here. Again, the single most critical thing is going to be average hourly earnings. Can we pump that up to, market is looking at 30 basis points. That would actually be relatively good. But 30, 40 basis points would be extraordinary. 20 basis points basically puts us right underneath the inflation data and shows no progress. And I think could weigh on the dollar if we go forward. Jobs don't matter, money does. And money has really not been able to catch up with jobs as we go forward. So now, looking at the charts here, you can see the euro just prodding along, holding the bid at the 116, and technically actually looking mildly bullish because we have a higher low here on a continuation basis, and actually sort of on a multi-week basis, we're holding a higher low here. I'm not extraordinarily bullish euros. It's essentially an anti-dollar trade as we traded. Can it trade back up towards the 17s as the week progresses? Possibly, but it'll only do so, I think, strictly on kind of anti-dollar flows. There isn't much to drive it higher fundamentally, but technically it still looks okay. I mean, it's a mild bet. The key thing here, the negative thing, is if we break the 1550. If we take out the 1550 on a closing base on a daily basis, that's a much more negative construct and would suggest that this range is really starting to fall apart and give way. But if we are floating around these levels for a couple of days, it's actually a bullish construct for the euro and presents a more of an upside structure for the euro. Pound dollar doesn't look nearly as strong. We're basically touching the 500 SMA, the long-term support here, double test of the 130s. But I actually think, and this is interesting, a rate hike with a dovish commentary could just wipe this out. The reason why it could wipe it out is if you look at it, first of all, if you look at it technically, it's just nothing but a series of higher lows and essentially a continuation of a downward trend. But the reason why it could wipe it out is because the market is going to basically feel that the Brexit issue is going to so curtail the U.S. economy, the UK economy, I'm sorry, that it will trump whatever monetary policy tightening that the BO. This is really, in many ways, a cosmetic, spectacle rather than a policy move by the BOE, because I don't think it has any continuation indication, like, for example, the Fed, which is looking to really normalize monetary policy. There's just too many uncertainties regarding Brexit, and a negative dovish cast could take out the 30s. And if it takes out the 30s, I think the really interesting trade is going to be down through 2950s, possibly all the way out to 28s. If we look on a longer-term charts, it's really the 28 that is the long-term support here. And that could be the trade as we go forward. Again, just my bias, but it just technically and fundamentally, it feels more this way than the other way. Dollar yen definitely came off. Of course, this was the Trump move. The Trump, as I said last week, Trump really killed the dollar rally and staying short dollar yen. Yes, last week I basically said dollar yen was a sell the rally trade, and it's been proven true this whole week. But we're holding bid here. And again, you can't make an assessment of where we go until you get a better idea of what a data is going to be. I think you need to spend the first couple of days just watching the market and watching the data set. If the data starts to look a little more sour, the critical component here is 10, 50, and then 10, 100. The 110, if that gives way, that's a much more negative construct for dollar yen. On the other hand, if we kind of hold it and the data proves positive, especially if the data looks robust into employment, it's certainly all possibility that we've basically bottomed here, and we can make a move back up towards the 112s. 113 still remains very much the key resist point, but a small sequential rally towards the 112s certainly not out of the question here for dollar yen. You just have to have an open mind. I really don't have a bias one way or the other as we enter the week, and I think you really need to let the price action speak to you this week because nothing is as clear. So that's pretty much how we set up as the week opens up. It's really going to be a show me week, both technically and fundamentally, and we'll be keeping both of ours open as we enter the week.